Hello, hello. Testing 1, 2, 3. Anybody hear me? La 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 la. Let's see. Da 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 da. Here's about a couple of minute delay. And oh, people can hear me. Fantastic, fantastic, fantastic. This is exciting. No one can see your screen. Click to start screen sharing. We can do that too. Let me know if you can see me. And we just need to move. All right, anyway. All right, the seeing seems to be working. The hearing seems to be working. That's all the ingredients we need to have a webinar. So simple. All right, let's see. Disclosure. Text to speech. Oh, we never got the text to speech working right. Oh, that's right. It was so bad that we had to abandon it. Let's see what this one does. Try nuanced text to speech, English. Okay, so go like that. And we highlight all this. Like that. And we go like that. And we go like this. Da 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 da. Okay, I'm not a robot. Congratulations to me. English is Zoe. We'll let Zoe read it. And play.
Access to this webinar is for education and
What the hell? Zoe. Stop.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involve risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
I'm still so disappointed in the state of the art of these things, right? I mean, you just think they'd be able to get that down by now. I mean, I would think, okay, because like, you know, the way she said webinar, it was like, why would you do that? Why would somebody not know that certain words being said incorrectly? Why can't you have this robot read every single word in the English language and then have another robot or several robots listen to it, and any word that doesn't sound right, you pull and let some humans make a fix of it and get it right? I mean, it's not that hard. I don't know. I don't know. Maybe there's no market for doing things the right way. I just don't get it, though. I really don't. And my mind is blown by these things. Anyway, so what's going on? Are we making any money? Probably not. What is this? If this is NQ, where's my things? That's what I had saw. Did I kill all those? Oh, it's frick. Sorry about that. It's broken. It's not from I forgot to reset Thinkorswim. Because actually that wasn't pulling up the data. Take it away. Let's see. Dun, 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 dun. Oh, why is that song stuck in my head? Was that a commercial? Take it away, something, something. That's the only part of the song I know. All righty. Hang on just a minute. All right, hopefully this will fix itself and we'll be in good shape. There's a problem loading the workspace. Oh man, you've got to be kidding me. You lost my charts. You son of a bitch. What? Oh, that's better. There we go. Ah, look at that. Oh man. I'm losing $600 on these Russells. I was doing good. I wasn't paying attention. All right, that's okay. No deal. Aha. So I sold half on the dip. I had 8 and I sold half, and around here I stopped out at 12.50, or I'm sorry, 11.950. We were hoping for 11.9, I think. What did we say? 11.9? I forgot what we said. What was our target? What is it they say? What is that expression? Do as I say, not as I do. Because honestly, it's like I'm very careless about these things with the futures. Like I say do tight stops, but then I don't myself pay much attention. What the heck? $11.8. Okay, so we were hoping for 11.8, but we're nowhere near that yet. But you got to take what you get, because I would have loved to have seen 11.8, but the reality is we went from. So here's me writing my post, and we're right just around there at 12, and then we started dipping down. We had a nice flat line for a while, but then it finally collapsed. And then it went back up, which was scary, but didn't come back, and it was too early in the trade to give up. But then, and also there wasn't enough money made here. See, 11,960 is not nothing. It's like $800 a contract. But I really felt it was going to go further to 11.8. But the bottom line is, it doesn't, just because I hope something's going to happen doesn't mean it's going to happen, right? You got to go on the fly. So it went all the way back up, which was very scary. And then it was like, oh man, what a waste of a trade. The whole thing's like collapsing. But then it went back down, got a nice spike down. So once you get that nice spike down, all the way like to 11.9, basically, say 11.9 probably got hit right here. So all the way down to 11.9 on big volume, you say, okay, fine. Also, it's going to bounce off this line, right? So you just, so you say, okay, it's not likely. So then once it got to 11.50, that was a stop. And then I was like, oh, thank God it stopped out. Boom, 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 boom. Went all the way back up. But I left 4. Because already made so much money, it doesn't matter. And now we wait until it comes back down again. And then if it comes back down and bounces here again, we get out of the rest and say, okay, fine, good trade. But you can't let your expectations dictate your actions. You have to observe what is happening now and make a decision based on what is actually happening. And it's not like I didn't change my mind. Nothing happened differently. Apple did not get hit as much as I thought it would. Oh, what? I lost all these? Seriously? I thought I loaded the setup and it would come back. Charts, no. Oh, this is so frustrating. So let's see, how many charts do I like to have? Like 12? Is that correct? I feel like it should be more. 16? 20 seems like too many. I don't know, maybe. It'd be kind of fun. It's a little small. No, that's yucky. Why is it like that? It came out the right way though. So anyway, I really thought Apple would take a hit. Hasn't taken a hit at all today. And I to me, if they're lowering the price of the App Store, which has gotta be, I would say 10% of their total revenue's got to be coming from that App Store. And if they're lowering the price by 50%, and even if it's only, let's see, use the old rule of thumb. See, this is how value investing works, okay? You have to build upon what you know, and that's why, that's why us old bastards are the best ones at it, though. I mean, these kids just don't learn enough stuff. And there's certain things like that 80% of your revenues come from 20% of your clients. So when Apple says they're cutting their take on the Apple Store in half, it sounds like a big deal and a big concession that they're making, but the reality is they're only doing it to clients up to a certain dollar amount. And since we then know that 80% of your business comes from 20% of your clients, and obviously the top 20% of Apple clients will not be getting a cut. And they won't be unless the Fortnite people win their lawsuit, because Fortnite is suing Apple over the fees, and Apple obviously can't budge on that. And Google does the same thing. It's not different than Apple. So Fortnite has them in court over these fees. Anyway, so bottom line is, so it's not a big hit. So if we imagine that overall the App Store revenue is 10% of Apple's total revenue, and that and 80% of the clients are 20% of the thing, so you're only losing a very small portion of their total profit. Now, I would say most likely, though, that the App Store revenue is disproportionately profitable to the rest of their revenue. So let's say, for example, that the App Store revenue is $25 billion. So profits in the App Store, profits in Apple, if it was 25 billion of regular Apple sales, it would be coming in about a 30% profit. So let's say $7.5 billion of profit. But this is the App Store. There really is not that much expense. It's a very profitable thing, probably gets to $15 billion. But now we know that they've only cut the profit in half on 20% on 20, I'm sorry, 80% of the clients who generate 20% of that revenue. So if we say the revenue is, where do we leave that off? If that revenue is $25 billion and that profit is $15 billion, let's say, then it's only cutting 20% of the 15, which is $3 billion. $3 billion of Apple revenue is not nothing, but it's not even 10% of their revenue. Their revenues are like $60 billion. So probably, I'm sorry, their profits are 60. It's hard to imagine that. Their profits is $60 billion. Therefore, it's only impacting them by 5%. But as I said this morning, 5% of a $2 trillion company is a lot. And $2 trillion is a very stretched valuation. So I'm very, very surprised that Apple is maintaining the way they are. But that's probably also because the analysts have people have probably weighed in and said, oh, this isn't a very big hit to them because of what I just said. But it is a big hit because 5% of anything's a big hit, especially when you have no particularly clear path towards making up the money. Anywho, so let's see how annoying this is going to be. I'll start doing it. Nope, nope, nope. See, every single one hit. God damn it. every single one has to be resized. What's that? Well, that's a little better. See, the problem is every single one has to be redone. So then I got to go and right click on this and put style. Oh, I'm sorry. So this style is already in there. The style, load style, 3-day, 5-minute, boom, boom, boom. And I have to do that now over and over and over again. It's super annoying. I guess that's the right size. So Apple, well, I don't really want Apple in the corner. You think it'd be like a spreadsheet, like I could just, you know, control right and it would go, they'd all fill in. The Dow, the S&P, the NASDAQ, the NASDAQ. Oh, it has to load an input thing. Oh. Wow, doing terribly today. Okay, and what do you think, the dollar? Can't find the dollar. DXY. What the frick? That's useless, huh? Well, at least it tells me it's 92. All right. So you right click, once you have a style, when you have a style, you save the style or you load the style. So once you have a spreadsheet, so once you have one of these sheets set up the way you like it, you just load it. And then you can clone it over each one. Well, I'm not sure where you have to click. Apparently it didn't like that. Style, load style, style, load style. That's ugly. Okay. Anywho, all right, so that's where we are there. Well, I'm sorry, so let's take a look at where we are. So we're pretty much flatlining here. The Russell's once again is popping up as noted by my losses on the Russell. So we'll see what happens. But yeah, I mean, okay, so let's get back to where we were yesterday. So yesterday, look, you guys know how I feel about this stuff. It's too much. That's it. That's why I'm sorry. I called to basically cash out the long-term portfolio yesterday, and that's just because you just have to know when enough is enough. I mean, these are ridiculous, ridiculous gains. Yeah, I mean, and yeah, great. Okay, we picked good stocks. We stuck it out. We took advantage of the drop, but 150% in a year. You have to recognize that that's not likely to continue. And if it does, God bless, then great. You know, we've still got money. We're still going to play the market. But, you know, look, realistically, I can't find much to, there's very few things you want to buy right now. And I found very few things to keep. But we did find some things to keep, and anything we kept is obviously a great trade. Because I was on a warpath to get rid of this stuff. So if I kept it, it must be good. And anything that goes off of our long-term portfolio has got to be something that's good for the watch list. And by the way, when I say I'm getting out, I mean I'm getting out between now and January because again, my main reasons, virus out of control, not even in the news, virus out of control. Not even something people talk about very much. I mean, obviously talk about it constantly, but realistically, I don't even know what to say about this. I mean, it's just, you know, WSJ, so the Wall Street Journal, for example, okay? All right, Pfizer has a vaccine. Good news. COVID economy. I mean, it's all about the virus. COVID economy, laid off employees becoming entrepreneurs. It's not really about the virus being out of control, though. Okay. New York hotel owners pay money. Pay the money they were supposed to pay. Big deal. Apple slashes App Store fees. Target, who cares? Wirecard, defund the police. 737 Max is back in action. It's the next disaster is going to be planes falling out of the sky. I'm getting very negative, aren't I? The challenge is waiting on a new stimulus bill. $100 million guaranteed salary for that guy. Great. Yeah, okay. Bad economy recovery won't spark a jump in inflation. PG&E. Nothing about the actual virus, though. It's the effect of the virus. It's like you're just living with the virus. The horrible, horrible thing that just keeps happening. And that's what I mean. I mean, obviously you can't not talk about the virus, but realistically, this isn't really talking about the virus. Now, I don't know if our good friends at the New York Times are any better, frankly. All right, let's stop off with the USA Today and see what they have to say for themselves. It's always interesting. So what does the USA Today have to say? See, as you know, I'm a news junkie. I'm always fascinated by this stuff. It's like, what are people talking about? What is the mindset of investors? That's what I want to know. What are these people thinking? So, all right, Fauci says Americans think twice about holiday travel. Trump's still looking for a recount. I mean, for God's sake, has he done anything lately? More people happy that Trump lost and Biden won. Who cares? Teens glued to screens need sleep. Mayo Clinics, 900 Mayo Clinic staffers infected. Now, Pfizer's going to produce 50 million vaccine doses in 2020. See, it's an interesting thing. Now, I guess I'm going to call my doctor up and just say, what's the deal? And if I get it, I get it. I mean, I'm not going to be a dick and like force my way into some program or something. But I mean, I'd like to get a shot and worry less. Maybe. I don't know if I'd be worried less though. And still get it. It's 95% effective. You know, there has to be a combination of getting. See, you can't get a vaccine and then run straight over to an orgy. It doesn't work that way. You get the shot, and what happens is, in theory, the virus has nowhere to go. 95% of the people are vaccinated, so it can't spread anymore. So it dies on the people it's infected already. It dies out, and then there's no more virus. That's how you get rid of it. It can't spread. If it can't spread, it doesn't stay alive. It will die out in the host body it's in until it's all battled out, and then it's got nowhere to go. Usually the virus goes somewhere. So, nurse says, and this is the USA Today, of course, not the New York Times, so we'll see what they say. WWE's Undertaker celebrates a 30-year legacy. How is that even news? Guy to Trump. That's just so funny. That's just basically only a little less important than the 737 Max. Or I like the way they put it. 737 Max, the jetliner that killed 346 people, is on the loose. Hide your children. Top stories. Flint residents didn't know how much they're getting. What? Oh, fill in the blank. How much iron they're getting in their water. My son's death didn't come from the country. Actually, how much lead they're getting. Trevor Noah, he's an important person. I don't watch him anymore. I got tired of it. I love the Daily Show, but every single story. I don't want to ruin the Daily Show for you, but I got to tell you why I don't watch it. He's because of the nature of what he's doing. He's doing the thing in his apartment, basically. He's doing a little show in his apartment. and they've got less of a studio, not the production, so on and so forth. So his innate personality as a comedian comes out, but every single story he does, every news story, he does a voice, he does a character, everything. You can't just get through one story and just say, here's what happened. Can't just tell a regular joke. It has to be a voice and a character every freaking time. And it just kind of started getting on my nerves. So you guys tell me if you start noticing that, because it's going to bother you now, I bet. But I couldn't take it. I love The Daily Show. I absolutely adore The Daily Show. And it was good unto him. It wasn't terrible. It was not as good as Jon Stewart, but it was still good unto him because of cast of people with him. And now there's no cast. Now it's Trevor Noah doing impressions and voices for a half hour, and it was driving me nuts. So I actually took it off my recording list. It was very sad though, because it was like one of my favorite shows, especially when Jon Stewart was there. George Clooney gave 14 friends $1 million each. That's a guy. All right. That's a guy you want to be friends with. Arizona renters were wrongfully evicted. No shit. Carnival cancel sailings into March. All right. Good Carnival. All right, great. So that's what's going on there. And then we look at the New York Times. Now, if you want to, now we look to find out what's actually happening in the world. The only paper left, really. It's really sad. I don't know what it's going to be like. I mean, what's going to happen when the Times is gone? What the hell? We're really going to have to rely on like the Wall Street Journal for our news? Like that's going to be the only news we see, or the USA Today or something? I mean, it's just ridiculous. I mean, so far they're living to fight another day. But you know what? I'm a New Yorker, and now I'm a Florida person now. But when I was in New York, we were proud. You know, we actually realized like it was a ridiculous price. So they're charging like $2-3 for the freaking daily paper. How on a, it used to be a dime. It's $2 or $3. It's like insane. It's like $7 on Sunday or something crazy like that. And anyway, but we were like proud to support them. That was the gist of the attitude. Like, we didn't, New Yorkers, we didn't even share it. Like, I know a lot of people, and they're all liberal bastards like me, but I mean, we're like, yeah, whatever, let's buy the Times. Like, don't want a discount. Just give me the paper. Make sure you get the money. Because you don't want this to go away. It's like, I can't even imagine what life's going to be like when we don't have like proper sources of news anymore. And we're basically on the cusp. Well, that looks like fun. Look at that. How nice. So now the New York Times, virus. The only paper that has the actual thing, virus. See, hey guys, virus. Maybe that's why I'm like this, because I'm like, this is what's real news. All right, so the FDA authorized the stay-at-home coronavirus test. I don't know if you guys are paying attention, but Elon Musk got diagnosed with COVID-19. Then he took another test, said he didn't have COVID-19. Then he took another test. He had a cold. That's what happened. He had a cold. Then he had another test, did have COVID-19. Then he took a fourth test, don't have COVID-19. So he stopped taking tests. He said, no, I'll take the no. So that's what and that was a proper test at a doctor's office. So imagine what a stay-at-home test is going to tell you. This is what we're relying on. It's crazy. And honestly, I don't believe that's the case in other countries. I think they have legitimate tests. As far as I haven't heard a big backlash of tests not being proper. So we'll see. Iowa's governor is now doing masks. That's nice. Save our church. That was it. All right, presidential transition. Tracking disinformation. All right, Pfizer's vaccine is now 95%. So both vaccines are 95% effective. We're in good shape. We're going to be out of this thing in the spring. So that's good. But between now and the spring, it's still dangerous. There's your hotspots, basically the whole country. New cases. This is what I mean by how do you not mention this? New cases, 159,000. New deaths, 50, not 1,000 a day anymore, guys. 1,500 people a day are now dying. 38% more than 2 weeks ago. I always like refresh the chart from the last seminar and I go, what the fuck? That's what this is now. Plus, I don't know why that's red, because red makes you think it went down. 14-day change, 79% higher than 2 weeks ago. Almost doubled in 2 weeks. But oh no, Joe Biden's going to become president. What's going to happen to us? Like, how could things possibly be worse? 1,500 people per day. Remember that jet? Oh no, that's not. That was USA Today. Remember that 737 killed what, like 300 people? And they make a headline about that, and they ground the plane, and the FAA takes things and all this, and we take the 737 out of the sky, and the government jumps right in and takes action. 1,500 people per day. And don't even get me started. Stephanie Nolan, I'm living in a COVID-free world just a few hundred miles from Manhattan. So, see, they have good reporters. All right, so here we go, going again and again. Safer than being on the ground, right? Safer than being at home. Safer than going to a supermarket. We really have to get consistent with our attitude towards like death and stuff. Trump fires official. That was a good one. Trump fires a guy, his own guy, who said that there was no election fraud. As soon as he said that, he's like, well, you're fired. Trump plan to sell Arctic oil leases will face challenges. Okay. 23 million reasons not to let states fail. Okay, all this crap, blah, blah, blah. Anyhow, so that's what's going on. But like I said, it depends what paper you read, how your take on the news is. So what your, it's going to color everything that you think. If that's where you get your information from. See, you guys know it's because obviously from the way I do my, news feeds, I read everything, and I love to read around different stuff, and I always like to change it up. And I read Fox and stuff like that. I post articles from Fox sometimes, and people are like, "What the hell's that?" I'm like, "That's from Fox. What do you want me to do?" You know, because I think you got to know what people are saying. But you know, it's just all different sources that I go for, and I like to just see what's going on: financial news, regular news, politics, whatever. But I think you've got to vary up what you read, otherwise, because you know, even me, it's like, okay, yeah, I know I'm a liberal, I like my liberal paper, but I got to read the Wall Street Journal to see what other people are thinking. I got to look at Fox News and see what they're doing. I got to look at Breitbart and see what those guys consider important. Otherwise, you can't understand what's going on. It's not. It's all just. It's all filtered through what you're told and what you're being allowed to see. And like I said, I mean, you know, you really literally could watch Fox News and think the virus is cured and everything's over and Trump saved us all. I mean, that's pretty much the message they're putting out there. And meanwhile, this is a catastrophe. There's nothing that's not red or orange or yellow, and basically nothing even that's yellow except for like Maine. These are all getting worse. Every single state, 50 out of 50 states are getting worse. And so much worse that it's hard to even keep it in your head how much worse that is. Especially deaths. And deaths are a lagging indicator by far. Okay, first you get sick, then you die. So therefore, it's a lagging indicator. It's not a leading indicator. You don't die and then you get sick. So when you see a lot of deaths, it means that there's going to be a lot more deaths. And until you start seeing this number come down, which is not even close to coming down, this number is going to get rocketing up behind it. After this comes down, these will start going down. But you've got weeks of uptrending death, even if you start getting this under control. People get sick, they go to the hospital, they die. That's what happens. We're not even close to dealing with this issue. And they're going to rush this vaccine and do whatever they can. So here's 11/11, and today's 11/18. I guess it's 7 days later. And we're going to take my nifty. That's Netflix. What? I don't know if you guys can see this on my screen, but I can't see these buttons. So I don't even know what this button is. Oh, that button is apparently the Microsoft Store. Ooh, Star Wars Minecraft. That looks like fun. Halo. You know, I got bored with I was playing Clash of Clans, and then I was playing Mortal Kombat. Not Mortal Kombat, Modern Combat. And now I'm starting to play Call of Duty. Call of Duty is kind of fun. It's kind of a good game. I like killing. So that's what I do to relax. I kill people. That's my favorite way to relax. Anyway, I was contemplating that though. I was thinking like, if you know you want to kill people, I guess you want to go to the army, right? I mean, if you like when you're young and you know you want to kill people, your best chance to do that legally is to go in the army. And I just wonder how many people choose that based on that fact that they want to shoot people. It's interesting because I contemplate this while I'm playing Call of Duty and killing people, but I'm like, it's kind of fun. Except you only get the one life. That's the problem. I don't think people really can think about that as much, though. But when you're young, you certainly don't, right? But one thing those games teach you is you will get killed. You keep going out there and having battles. It doesn't matter how good you are. Someone's going to kill you at some point. Anywho, so what are we writing down? We're writing down that last week there was 50, let's call it 50, number look, 52 million global cases, 10.3 million in the US, 1.27 global deaths and 240,000 US deaths. Is that right? 52 million global cases, just under, 10.3 million in the US, 127,000 global deaths, 240,000. All right, so now we roll the soap board and see how we're doing. Dun, 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 dun. Ho-ho! 56 million. 4 million more people in 1 week have been infected. 4 million folks in 1 week. 4 million. How many people live in your town? How many people live in your state? How many times can we have a week where we have 4 million people infected before you catch a virus? That's not America, that's a global number, but holy shit, right? In America, 1 million, 25% of those people were infected in America. 1 million. And again, how many people are in your town? Not a million, probably. 1 million people, 11.4 from 10.3 in 1 week have been infected in 7 days. That is freaking amazing. All right, now we have 250,000 deaths. We were at 240,000 deaths, so we are basically, now we're on realistically, okay, we're up 9,000 deaths, only 9,000 in 7 days. So we're 1.3, so 130,000 a day on the average in the last 7 days. But we're trending up. We're up with a bullet. So, and what was this other one? Global deaths went from 1.27 to 134. So that's up. Well, that's up a lot. That's up 100,000, right? Wait, what did I do? No, that's the global deaths. I'm sorry, 127 to 34 is up 7. So 70,000 global deaths, and 9,000 of them are in the U.S. There you go. So out of 70,000 global deaths, 9,000 are in the U.S. Now I got a handle on it. So 70,000 global deaths, 9,000 years. So we're not doing too badly on death comparatively, but we are horrendous, accounting for 25% of the world's new infections in a week. Just our little country with 4% of the world's population. Not only that, though, but that's the other thing you have to realize. We are way spread out compared to most countries. We have 300 million people here. They have 500 million people here. They have a couple of billion here. Africa, they're probably good for about 1 billion people in Africa, I imagine. Something in that neighborhood. These guys have probably 1 billion people down here too. So we're like way less populated. In Canada, forget it. Canada's got like 40 million people total in this whole thing. That's crazy. They can't even find each other, those guys. I don't know how do they get infected? I don't get that. Where is Canada's number? It can't be a big number. There, Canada, 300,000 cases. 300,000 cases, losers. We can do that in a day. Just give us 2 weeks, and we'll be doing Canada. Canada's entire infection for a year is going to be. We'll be able to do in a day in a couple of weeks. That's the rate at which we're accelerating. So what do we do? Anyway, nothing. There's nothing we can do. I don't dwell on it. I refuse to be depressed by this anymore. It's just a funny. It's a funny way to watch things happen in my life, I think. I was watching this 100-year-old lady yesterday, very lucid woman too, talking about like how she felt so fortunate to have lived in this past 100 years. And I'm thinking, it's interesting because like her life started in the Great Depression, and now we're into a massive global recession with a virus and all this stuff going on. And she's just like, what a great life. I found that very interesting. I mean, you know, her looking back at the whole 100-year arc of her life, and she thinks it was all a hoot. So, you know, I think I have to have that attitude too. I think I can't worry about this stuff too much. I mean, you know, I only care. I mean, I guess I care in general, but I mean, I really care. It's my kids is what drives me nuts. Just I feel like my children are being threatened by this, and that's what kills me. That's what pisses me off, and I can't let that go. That's what really drives me to be angry about this stuff all the time, because it's just, you know, I mean, this is my family. You know, I mean, I care about everybody. I care about my friends. I care about strangers. I care about the 100-year-old lady. I hope she's okay. I mean, I'm one of those people, unfortunately. But holy crap! I mean, how do we screw this up so badly? I mean, this is. Look at us. Brazil was catching up to us for a while. We went flying past. There was a point at which Brazil was right behind us, like 1 million below us or something like that, and we have blown past them. We're almost double Brazil now. Even Brazil got things under control. India, got to be fair, they got 1 billion people. We don't have 1 billion people. We have 300 million people. They're catching up a bit, also doing a terrible job. Also with a populist leader who's an idiot and doesn't like listen to a scientist and stuff. But India's look, here you go. This is India, right? This is about this big. So in 1/3 of our area of land, or half of our area of land at most, is 3 times more people. When you're in crowded places, it's very hard. That's Japan's problem. Too many people. They got I want to say Japan has 120 million people. Population of Japan. Oh my God, am I good? Holy crap. That's just fantastic. Okay. So Just makes me happy, like not to be totally senile yet, you know. It's like my brain still functions. Anyway, so 120 million people here in this in New Jersey, basically, or Florida. Is like it's not much bigger than this. So I mean, if you know, this is Japan. They got 120 million people there. So of course they're having huge trouble, but not that bad because they were way the frick down here. Where are you? Can you believe I can read this fast? That's cool too. Well, yep, I didn't miss it. I see. I start thinking I'm missing it, but I didn't. 123,000. 1 in 1,000 people, even though they live this close together. But that's good. They're Japan. They know how they get things done. They want to get something done. They get it done. Not us. So I don't know. Anyway, so let's get back on topic. That's why I have to cash out. The virus still raging. No one's paying attention to it. Nobody's factoring it into the market. It's crazy. So I just don't feel comfortable under these circumstances. I don't believe that it's what on earth? Yeah, TV stopped displaying Bloomberg for some reason. Anyway, all right, well, now we'll never know what's happening. Well, that's so weird. The TV went totally blank. Can you reset it? Nah. All right, anyway, I had to reset it or something. So the point is, we're up a ridiculous amount of money. We would have to spend a lot more money to protect these positions. And even then, we're not sure how well it's going to work out protection-wise, because it's very hard to, you know, when these markets have huge sell-offs, it's very tricky. And the problem is that if there is a sell-off and we have cash, we're going to be able to take advantage of like so many cool things that we can buy and take advantage of. If there's a sell-off and we're busy selling off to catch up to the rest of the market, we might be protected by our hedges, but we won't be focused on what's really important, which is the bargains. So here's where we are. So first of all, keep in mind that anything that was on a long-term portfolio, anything that was in the long-term portfolio that goes off the long-term portfolio is immediately should go on the watch list, unless there's some reason that we think the company suddenly turned around and started sucking. But if we take something off because of valuation, immediately that's how we're building our next watch list, right? So as we pare down our portfolio, we're going to start building a watch list based on who would we like to own that we're selling. All right. Meanwhile, the ones that are left are also obviously on your watch list, right? Because these are companies that I feel still have room to run. So here's Harmony. Who doesn't want Harmony at net 2? It isn't net 2 anymore though, because now you're only getting 68 cents. So therefore, not the kind of trade we really wanted. Coca-Cola, we're killing it. Micron, we're killing. Milo, we're killing. Berkshire, we're killing. And why Berkshire? Because Berkshire Hathaway is really just the S&P 500, right? It's a little better. And you know, people ask me about ETFs and saying, what do you like? Berkshire Hathaway is the greatest ETF in the world because it's being curated. It's an ETF curated by Warren Buffett that basically is made up the same way the S&P is made up. It's got some tech and some this and some that, you know, different mostly consumer type things, but it's very broad based. You know, he's got IBM, he's got banks, he's got insurance companies, so on and so forth, and not everything is even public. So it's not as subject to the whims of the market. It's a buffered portfolio because it's like having bonds, right? He's got his annuities like Geico, which isn't public, that just pays him a dividend. It just constantly pays him off. So they make money, they pay him. There's no market. You don't have to worry about whether they're up or down in any given quarter or something like that. They're just basically just shoveling money into Berkshire. He has a lot of other little businesses like that that are private companies that he owns, but he also has public companies like IBM and Coca-Cola and things like that he also owns. So, and he's already taken the best companies in the S&P 500 and taken an ownership stake. Very simple strategy. When I get billions and millions of dollars, I'm going to do that too. It's a very simple way to invest, right? Just pick the best blue chip stocks and invest in those, and then also pick some private companies and invest in those and let them generate cash for your business. And that cash you use to buy more blue chip stocks. Wash, rinse, repeat. The guy spends his whole life on vacation. He doesn't work hard. He reads a lot, which is what I do. I want his life. I just want to read a lot. So just leave me alone. Let me read my books. Let me read my papers, and I'll be very happy. So where were we? Berkshire. All right. So it's a proxy for the S&P 500. So at this point, I think Berkshire's overvalued. Not terribly overvalued, but I'm not running in to buy it here. Warren Buffett was buying it at down here. His buy point was down here. You know, he says when Berkshire's undervalued, he steps in and buys it. His buy point has been here for the last couple of years. So that's where he supports the stock and jumps in and buy it. They don't have a buy program. They don't constantly buy their own stock. They buy their own stock when he thinks it's too cheap. And that's been down here. That's basically puts a floor under the company. And the other problem with Berkshire is Buffett's going to die one day and the stock's going to go down for no good reason. Same way Apple did when Steve Jobs died. It didn't go down for long. It went up after that because people say, okay, so it's still the same company, still got good management, the successor's a good guy, so on and so forth. But look at the kind of tumble they took. When you have I mean, look, they did it here too. When you know your company is capable of doing this, it's hard to hedge. So we ended up with a pretty large position in Berkshire, and I said, well, the hell with it then. It just went beyond my, wow, go away. It's now beyond my expectations. I did not think it was going to recover this much. I didn't think the S&P would be this high. So it's time to let it go. Thank you. Done your job. All right, and that Berkshire position was this spread, which we took in March. And it's pretty much realized. It's a $30,000 spread at $25,000. So all we can do by leaving $25,000 in this position is make $5,000 by January next year. Not next year, 2022. So a year from now, anyway. But we can do better than that. Oh, I'm sorry, this is June, it's not even January. So this is 18 months out. So 18 months, we need to make $5,000 on $25,000. Is this the best way to do it? Of course not. Obviously not. We made 150% in this portfolio in 12 months. You're hurting yourself in these kind of positions. And I know it's great money. I know 20% a year is great. But realistically, we are smarter than that. We can do better. And this is a risky stock. It's not a riskless 20% because the stock just did a massive correction. It just did this. Yeah, it just did this. It could do that again. And if it does that, our position will not be in good shape. We have the 170, 190 spread, and it went all the way down. Well, it didn't go down to 170. That's why I thought it was like a brainless thing. When this happened, we bought the 170, 190 spread. Super conservative. But it's already come back so much that there's no point to it. Oh, I'm sorry, that's not 170, 190. Stupid me. That's Berkshire B. I'm looking at the wrong numbers. Sorry about that. So it's the same chart as just Berkshire A or Berkshire B. So it actually did fall below 170. When we were in March, Berkshire did this, and my reaction is buy it. Obviously, because they're on my watch list. Exactly what I'm talking about. They're always on my watch list. Always on I either own them or they're on my watch list. And when they get cheap, I buy them. It's not complicated. It's not a difficult trading strategy. Caterpillar, another one. When they get cheap, I buy them. They're not cheap. 25,000 here, only can get to 30. What's the point? I can do better. Doesn't mean I don't like Caterpillar. It just means I can do better with 25,000 than that. PAA pays a great dividend. I think I made a note of that. Yes, 14 just paid is 14.40. So we have I don't know what the date is on this one. PAA 2022. So we got 4 more 1440s to collect, which is like $6,000 basically. You know, plus we'll make money on the spread. So there's no reason to kill that one. It just keeps paying us money. We don't. It's not like we need the money. So it's not costing us any margin. We don't need the money, and it pays us nice. It'll pay us $6,000. There's no reason to turn that down. So we have nothing better to do with the cash. We may as well leave it there. Avgo, Broadcom, 95 out of 120 potential. That's a marginal one because it makes $25,000, but still, it's $25,000. It's not even 30%. Still in the 25% range. I don't consider it risky, but you know, it's a lot of money tied up. I mean, there's another factor also, AVGO. So how bad did they get hit? Look at what they took a hit, 50% drop. All right. So that means I've got the position of 183.20, and it can drop 50%. That's going to take a big bite out of my $90,000. So I would have to protect that. So I'm already thinking, okay, I've got let's say that would leave it at $30,000 a position if it did drop like that again. That means I kind of want to hedge about at least half. I want to hedge at least $30,000 on that. How much does it cost me to hedge $30,000? It costs me $5,000 to $10,000. Let's say $7,500 to hedge it. So now it's not 95 out of 120 because in order for me to keep this position, I've got to spend another $7,500. So now my potential is now down to 110, 115, whatever, 112, 5. So now all of a sudden I got to look at that and say, well, now I can only make 17,000 out of 9 Avgo, and that's 20% because I have to hedge it. And you've got to calculate that costing when you're thinking you're hedging. What is it going to cost me to hedge this particular stock? It's capable of dropping 50%. I cannot ignore the hedge. Okay, Berkshire, at those low numbers, I could ignore the hedge. I could say, you know what, I only need a little hedge. I really don't think it's going to go lower than this. And if it does, I'm dying to own them, blah, blah, blah. Broadcom, yes, of course I would be dying to own them at that price, but I'm going to lose. I have 95,000 cash. I've got to protect it. And it's capable of dropping 50%. Therefore, I must hedge. Therefore, my hedge will cost me $7,500. Therefore, I can only make 20% on this entire position because I'm either going to lose on the position or lose on the hedge. And then what am I doing it for then? Now it's and now I'm making a complicated thing. I've got to have a hedge. I got to have a position. I got to balance them. I got to watch them. It's not worth it anymore. It's too much bullshit to stay in. That's how I make these decisions. Berkshire. We're running this one as an income play, so let's keep it. Different math. If the market drops 20%, Berkshire will drop 20%, but that's only back to 180. I'm not worried about the short puts, and we can roll the short calls as well. So what am I talking about? Here we have a 150-200 spread, 2022, so it's going out 18 months. I don't care. I will always want to own Berkshire. So if they do drop, this is a tight spread. $50 spread is a pretty tight spread. We bought it at $20 or 20. Actually, it was $26, and it's a $50 spread that we bought for $26. It's not likely to go much below 13. It's going to be hard for it to go below 13 before we can pull the plug. So we're only risking $13. So that's how I look at it. It's in the money. So we're not risking anything right now. But I mean, even if it crashes, we'll be able to get out with $13. The short puts at 150, I look at those in isolation. Minus 18 that we collected for them is 132. I'll buy Berkshire for 132. I don't care what happens in the market. I will buy Berkshire for 132. Therefore, this costs me nothing. It's not worth worrying about. Although realistically at 80%, we should probably move to something else. And then we sold the January 220 calls. They're at 233, so we have to roll them. But look what we collected here. We collected $11. They're now at 1653. So even though Berkshire has rocketed up, we're still in fine shape for rolling, and we'll roll them along. But the bottom line is here we have a position. 47 minus 21 is 16, right? Minus 9 is 7, and minus 5,500 is $1,500. This is a net $1,500 position. That now, of course, the first sale is included in the net, but we have a sale here of $5,500. So it's a $1,500 position that we sold $5,500 worth of calls against. It's a money play. The fact that we might make some money on Berkshire going higher is a bonus, but that's not what we're in this position for. We're in it for the money play. We're able to sell a phenomenal amount of money, of position money for it. And how covered are we? Well, if Berkshire's over 200, we're definitely going to collect. We're going to double our 26,000 and have $50,000, right? So we've got $26,000 worth of upside protection. We're currently down $2,700. And the only way we could lose this money is if if this is in the money. So we're up 26 here, minus 27 here. That's our hedge. Not to mention the fact that we're going to collect all this money too. So, and meanwhile, of course, this is only January. So we'll roll in April to the 250s and 260s if we have to. Then we'll roll to the 270s and the 280s in July. And then we'll roll to the 290s and the 300s. We'll just keep rolling higher and higher. And if Berkshire keeps going up and up, we'll eventually buy some more calls, or we'll just take our 2,000 loss and go home. But this is an income play. And if we don't make the income, we'll only make our 26,000 here, and we won't make this money. But you know how that works. That's how our butterfly strategy works. So inside our LTP is that butterfly play. I see. We went back to Broadcom. And then there's a CHL, which is a brand new trade. So I said I still like them, and they keep going down and down. Oh my God. They just cannot catch a break. And I guess it's because of this crackdown at Alibaba, and people are thinking like that Z's going to start like cracking down on everybody. But to me, the crackdown on Alibaba is fantastic for China Mobile, because you see they were racing up, and then Z did this bullshit with Alibaba that spooked the market. Because they're another monopoly, right? Alibaba's a monopoly. These guys are certainly monopoly. They got 950 million subscribers. There's 1.4 billion people in the country, so most of them, they're two-thirds of the people in the country are China Mobile customers. That's a monopoly. So I'm sure that there are other phone companies might have a lobbying against them, but meanwhile they seem to do pretty well. I think that Alibaba is probably one of their most dangerous competitors. Not that they're directly doing phones now, but he's looking at it. I mean, what the hell else is Jack Ma going to do with hundreds of billions of dollars? So, they're looking at this space and they're considering doing this stuff. So they've got to be worried about that. So this, this anti-competition thing is great as long as China Mobile keeps acting like a utility company and not like a big entrepreneurial thing like Jack Ma. And what Jack Ma did that pissed off Z was he started talking about, he started bad-mouthing the banking industry in China, which really is not smart. And so he criticized the banking industry, and he talked about that like Walmart did, right? And Walmart got crushed in America, wanted to start his own bank. And the Chinese government was like, no, you are not doing that. Banks are run by the state. Banks are not run by people. So that's what started killing China Mobile, just speculation that China's going to start pushing in on everybody. But I think they're just pushing in on people they don't like, which, you know, of course. So bottom line is, though, the bottom line is 950 million subscribers. Please, 950 million subscribers. I don't care what this number is. They have 950 million subscribers. That's a lot of subscribers. If they start losing subscribers, talk to me. But 950 million subscribers. It's a lot of subscribers. They're really worth the money. What if they figure out a way to make a penny off of each one of them, right? A penny a month. That would be 12 billion more dollars. They're horrendously undervalued company. Anyway, so I like that. So there you go. Now, then you have to say, well, okay, well, that's really interesting. So trade of the year? No, because I don't know. I don't see a definitive upside catalyst. There's too much unknowable in China for me to make a statement like that. I can't say that's a trade of the year. It's just because it's cheap doesn't make it a qualified candidate. I have to be cheap and ready to move and very, very solid fundamentals that can't be disputed. And the thing about China is you don't know what the hell those guys are going to do. Cisco, if they were cheaper, they might be the trade of the year. This is insane. With 5G rolling out and all the stuff that's happening in the corporate world and everything, even having a bad year, they're doing pretty good. They're really keeping it together considering the virus and everything else. When people go back to work and so on and so forth, they're going to start booming again. And the Internet of Things is all about Cisco, all about them. All right, got Foot Locker. And as I said, people got to wear sneakers. I mean, that's just, to me, a no-brainer. I don't know where they are. Chart-wise, where's the chart? I don't know how the chart is. Oh, open a new tab. There we go. So they're doing pretty good. Wow, what did I just do? Oh yeah, it's here. Okay, so I don't know what that spread is, but it's something I didn't feel like it was worth changing out of. It is the 25, 37, 50 spread, and they're at 39. So they're in the money, but it wasn't, oh, I see. It's only 16,000 out of 37. So we still have 100% to gain on that one. So I'll keep that one. Now, Gilead, back in the bargain. Now, here you go. Here's one that's getting close to the kind of thing I might pick for stock of the year because I think this is a stupidly low valuation. Like Pfizer, I consider anything now they're off the COVID race, and this is what happened. They went out of the COVID race, and people start saying they're not going to get it, they're not going to get it, they're not going to get it. It's like when you watch a horse is like losing a race, and it's just like, oh no, not getting better, not getting better. Oh, now he's got no chance. Okay, so they bought him back out at 60. You know, because they're not going to have a virus, and the other thing doesn't work. Remember the Revendismir, whatever the hell it's called. G-I-L-D, Gilead, right? So Revendismir is not really the cure anybody thought it was going to be. So they're back at their lows. These are their lows. This is where they trade when nothing else is happening. This is where they traded when everybody thought they were going to have the cure for COVID. This is how they're trading when everybody says they're not going to have the cure for COVID. But meanwhile, well, 60 times current earnings, that's true. All right, so there's the floor and strategy. So this is now $76 billion, right? So that's what I care about. And this is, you got to learn not to pay attention to certain things. We talked about this. Yeah, can't pay attention to this when you know you're in a screwed up situation. So we go over here now. I keep the 76 billion in mind. And now I put in Gilead over here, and let's see what they're really doing. So how's it going, Gilead? All right. So basically, they're making $5 billion a year. They're kind of erratic. Okay. Net income, 3, 12, 18, 13, and they're not losing sales. Well, they are losing sales. I'm sorry, they did spin out of the division. So 18, 13, but the new Gilead, 4, 5, 5. And quarterly, how are we holding up? Okay, here's the problem, right? They did some write-downs and took some hits and so on and so forth. But they were doing, and by the way, it's not unusual that they lose money sometimes, happens. But what do? So quarter one, 1.5 billion. Quarter two, they did a write-down. Quarter three, not good net income. And same thing, though, it's a write-down that went over 2 quarters. Now they're going to go back to making $5 to $6 billion a year on a $76 billion valuation. So their P is more like 12, 14, in that range. So nowhere near as bad as they seem, but people who are looking at them, they see this and they stop and they go 60 times earnings, blah, blah, blah. Oh my God, they lost $1 billion last quarter. But that's not the case. It's a very solid long-term pharma company. It's almost good enough to be a trade of the year. Because if you look at them, and I'm going to do what I did last year, we're going to review like the potential candidates for trade of the year. GILD. So if we look at 23, and they're at 60, so I certainly don't think there's any reason for them to go below 60. And if we let's say we sold the $60 calls, they're totally well, it's 61, so they're like $9. And what can I buy? Can I buy the 45s? The 45s are $17.50. So for $8.50, I can buy a $15 spread. That's 100% right there. Now, how do I make that more attractive? Well, look at that. I can sell the $55 puts for more than $8.50, for $9.50. So suddenly this gets interesting because now I could collect $9.50 on the puts, and I'm buying the spread for $8.50. So let's say I sold 10 of the puts for $9,500, and I bought 15 of the spreads for, don't know, what I say, $8.50 times 15 for $12,750 minus 9,500, so $32.50. So my risk is owning 1,000 shares of Gilead at, what do we say we were selling? The 55 puts. So it would be at $58 because this would apply. So it would be $58.25, a little bit below the current price. So 5% discount, not much of a discount, but I'm in for net $32.50 on the spread. And if it pays off, it's going to be 15 times whatever I said. I forgot it's a $15 spread, right? So it'd be 1,500 times 15, $22,500. So now it's kind of attractive, isn't it? So $22,000 minus $3,400 is what it cost me to buy the spread. $19,100 profit if Gilead stays at 60 in 2 years. $19,100 divided by 3,400 again, 561% upside. But is it a trade of the year? I don't have a really good reason to back them. I would certainly put them on my list, and I would certainly think hard about what's going to happen to Gilead over the next 12 months. And I would look very closely at the losses, why they took those losses, and what they're set up for going forward. But I still don't have, even if all that falls into place, I still don't have the catalyst because they aren't doing anything surprising. I'd have to look carefully at their pipeline and think about it and say, what's really coming down the line for Gilead? But either way, great trade, and that's the thing. I mean, if you look at our trade of the year candidates last year, they were all great trades. They all came out great. They were all great ideas. We just had to pick the best one. This is a great idea, but it's not the immediate catalyst that I'm looking for. The reason we went with gold last year, Donald Trump was debasing the dollar. Spending was out of control. We didn't know there was going to be a virus and it would go booming up, but spending was already out of control. We're already debasing the dollar. The Fed was already easing. So it was a good time to play gold because gold had not really responded to the reality of dollar devaluation. So that's why gold won. Gold had a catalyst. That's why we went with gold. Gilead doesn't really have an immediate catalyst. Certainly not a catalyst I see 6 months down the line. And that's what we got to take into account when we're doing these things. All right, but look at what we're doing. We're doing basically what I just said. We're rolling the roll of 30. We're going to roll the 30 puts. I'm sorry, the 30 long calls are rolling to 50 of the 45. Oh, I just said 45. That's funny. So 45, and I was a little more aggressive when I was doing this. So we went 45.65 instead of 45.60, which is more conservative. I went with 45.65 at net 10, and we left the rest of the trade alone. And those pay 100,000 if all goes well. So as you can see, even if I'm thinking about it from scratch, it's still pretty consistent what I want to do. GM, the bull call spread is 30 out of 35. Can't keep that. Doesn't make enough money. Goldman Sachs, 6,000 out of 40,000. Well, that's worth keeping. And I said good for a new trade, in fact, right? Is it a trade of the year? I don't know. Maybe it is. Is there a catalyst for Goldman Sachs? That's the problem. See, now I have a doubt. Because as soon as I start thinking, is there a catalyst? When catalyst is Biden, Harris, and Warren are going to be in power, the Republicans still might lose the Senate in Georgia, and that'll be doomed for these guys. So that's iffy. There's a risk factor. The fact that I can easily see a risk factor means it's not one I'm probably going to pick for trade of the year. IBM. Obviously, that was my trade of the year 2 years ago, so it's obviously still, our target was 150 then, still worth 150. So I said with that trade, I'd be happy to own them at 100. So IBM, it could be a repeat. Again, but where's the catalyst? Is there a particular catalyst other than the fact that this is stupidly cheap for them? If they were at 100, they would be the trade of the year again. In fact, that's when we did come in, when they were 105 2 years ago. IMAX, that one was going to be my trade of the year. I'm so pissed. It was just, now, what's my catalyst for IMAX? The virus will end. The virus will end and people will go back to the movies. That's a pretty easy catalyst. Right? That's obvious. That was my catalyst the whole time I'm banging the table on IMAX. Why am I banging the table on IMAX? The virus will end. We will go back to the movies. Life will resume normality. They will go back to making tons of money. Intel, Intel. Now we have a controversy about whether or not Intel is getting better, getting worse, so blah, 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 blah. I still like them. I was happy to stick with them. I mean, I'm certainly not getting out of Intel at $45. $45 on Intel is crazy. INTC. Even Yahoo's got to know that. They don't know nothing. 8.87 PE. So it's $185 billion. Let me go back to my proper chart. Go back to the proper money on this one. INTC, 185 billion. And this is annual. And they make what? All right, you see, you got to look at that. Well, they did again. They did twice in a row, didn't they? Damn it. $21 billion. Holy crap. That's crazy. Look at those margins, too. Quarterly, how are we doing? 21, son of a bitch, right? Wow. Dudes. I mean, come on. All right. Now, see here almost on valuation alone, they're 71 billion in revenue, 21 billion in profit, 30% profit margins. That's net profit. Net profit, 30% net profit. They paid their taxes, 30%. Holy crap. Not much taxes, but they paid their taxes. you know, $3 billion on 21 billion in profit. And there's the other thing. Reason number 2 why I don't like this. Look at this crap. 21 billion, 2 billion in taxes, 21 billion, 3 billion in taxes. Look back here. Before Trump, 11 billion, 2 billion in taxes, 10 billion, 2 billion in taxes. Double the income, not even 20% more taxes. This can't, if this goes back, where do you think this money is going to come from? If they have to suddenly pay 6 billion in taxes, comes out of there. Suddenly companies are way more expensive looking. And that's reason number 2 that I think that we got to get out of the market. And Lebu, 36 out of 40, bye-bye. If it ever gets cheap again, happy to get back in. Macy's, well, see, it wasn't too soon, was it? I said I told you so yesterday, 2 days ago. Holy shit, wait a minute. So this was Monday after it was all, wait, when did we do this? Yesterday, it was yesterday, sorry. Oh, this is, I think this is today though. So since I wrote this, Macy's gone from 8 to 9. What are you gonna do? Okay, that again, another one that would have been my trade of the year because it's just insane. And it's again, you know, and obviously it's this, you know, the P is not the be all and end all, but it's a good place to start. It gives you a quick look at what's going on. Their P is not available, but $9, 2.78 billion valuation. And again, you go back to the most useful thing to do is to go back to see what do they normally do. So net income for Macy's. This is going back many, many years. 1.5, 1 billion, 600, 1.5, 1.1, 500. Obviously, not a good year last year. Format quarterly. Net income. Ooh, big write down. So they took advantage. And this is smart when you have when you're a big real estate company like Macy's is, they're big on the real estate and big on assets. You want to do a write down like this when it's a bad year anyway, because you're like, well, what do we have to lose? You don't want to piss off your shareholders and do a huge write off and drop 20, 30% in the middle of a good market because you look like you suck. But do it in a bad market and you can get away with it, and then you don't have to pay taxes for the next 20 years. So that's their basic plan at this point. So ignoring that, and I would have to say that they're probably good for about 300-400 million a year, 500 million a year in profit. Not to mention they could at any point in time sell off some of their land, which of course obviously retail space took a huge hit now, so you have to say that's definitely not in their favor. But still, their retail space is very unique. They are in the middle of the city in the best places. They are in the best spot in the malls. Usually Macy's is the anchor for a mall, maybe like one of the 2 anchors in a mall. And those are prime locations. And they own Bloomingdale's too, of course. So on the whole, they've got a few buildings in Manhattan that are worth fortunes. And I'm sure in other cities as well. I mean, not like Manhattan's the only place they have Macy's where they have giant places. And they own, you know, they've been around for 100 years. They own this land. They don't just rent it. So that's why I like them as a play. But again, no particular catalyst, just really good deal. Middle B, I'm going to miss them. I love those guys, but they're too expensive. MJ ETF, that's still going strong. 3M, I think it's still got plenty to run. Philip Morris, meh. I said there's no penalty in selling because and again, see my decision process. We're up here. This is yesterday. So we're up here, and I say, I see no. Why would you not sell? I'm getting $1. You say, oh, but we're going to get to 42.50. It's like, no, maybe we won't. At 42.50, it's not because I didn't think we can get to 42.50. Obviously, we can get to 44 pretty easily. Maybe we get to 45, but you know what? I can roll 42.50 to 43, 44, 45. You know, so over the next few months, I can roll it. may as well collect the money now, because there's two purposes to that. I'm selling the calls, collecting my premium, which I'm going to make this premium no matter what. It's all premium. Definitely going to make that money no matter what the position is. And also, what if we go down? Then it's insurance. And look what happened. We go down. But that's why you can't base your trading on a chart. You base your trading on the real valuation. It's like first I see a value, first I decide what something's worth, then I look at a chart. Oh, not there yet. Okay, Pfizer. So Pfizer we just bought, that's great. SKT up. How many times have we talked about SKT? Tanger Factory Outlets. It's an outdoor mall, factory outlet stores mostly, but they make them like a little villagey design, you know, like it's like they make a little town out of their places, and it's nice, and they always hold events, and they're very good. It's almost like an upscale outdoor mall kind of thing. Anyway, I very much approve of these guys. They manage themselves well. This is just an opportunity for them to do stuff and to buy more stuff and so on and so forth. They're brilliant management. And then just, you know, it wasn't even like you had to be patient. 6 months later, they're back on track. Still a great thing. Was also a trade of the year contender. If I was like at 6, 7, I mean, for sure this was going to be my trade of the year, because again, end the virus, next Christmas is a real Christmas. All the stores fill back up. You know, their capacity rating hasn't even dropped that far. But even that, they'll go back to having more tenants signing up, and people are going to fill all those empty spaces, and everything's hunky-dory again. You know, they don't make the money off the shopping. They make the money off the people who think they're going to sell to the shoppers. So unless a huge amount of those guys are going bankrupt on them, and we've talked about that in the past too, they don't. One of their strategies is they don't allow any single tenant to be more than 5% of their spaces. So they're very, you know, they're very diversified. They're very into it because they don't want to get slammed by bankruptcy. So 1 or 2 other guys go bankrupt on them, it's not going to destroy their cash flow. All right, and Simon Property, another mall retailer, again, another one that's banging the table on because Jesus, I mean, it's just so ridiculous. You know, look, if there was an apocalypse tomorrow that wiped out every single store in your mall, what would happen 6 months from now? There would be all new stores. The mall would still be there. Nothing damaged the building. So, I mean, if they all disappeared overnight, perhaps a mall operator would be damaged. But the reality is, a store goes out, they put up a sign for a few. Mall operators don't even put up a sign, right? They don't even put up. They always say coming soon something, even though it never comes. But they put up a sign. And you know, when I first moved to Delray Beach, there was a sign saying there was going to be a Haagen-Dazs store on the corner from me, and it was up there for like 2 years, and they never built the store. So weird. And then they just finished it last Christmas, and then the virus hit. I felt so bad for them. For like 2 years, I was like, well, where's my Haagen-Dazs? why do you have this sign up and there's no actual Haagen-Dazs? It was so annoying. And the place that was supposed to be a hamburger place turned out to be a used bag place. They sell used designer bags. I don't know why I don't know how that happened. But again, like I'm saying, you know how they do that with the store. So they don't like to say they don't have anybody in the store, so they put up a coming soon thing. And that's what the malls do all the time. But either way, the bottom line is the way it really works is one by one, a store goes out of the mall, store goes out of the mall. And unless even in a crisis like we're having now, you still see people moving in and starting new stores. Crazy as it seems, they still go in there and start, because everybody's got a dream. Everybody thinks they can make money. Everybody thinks they got the next new thing. So the mall doesn't get paid. The mall operator doesn't get paid on the sales. They get paid. They do what I think is the best thing to do in this economy. They make money by providing a service to the top 1%. The people who are buying the people who are taking the space at Simon Property are not the poor people. The poor people are shopping. And frankly, they're upscale, so not even the poor people. But the poorer people are shopping. The rich people are buying the stores. They've got money. They can take losses. They've got backing. And you know what? Even if they run out of money and they run out of backing, another rich bastard's going to come along who doesn't think twice about renting a store. Because there's always another rich bastard. And that's why these are good businesses. Same thing for Tanger Factory Outlets. Same thing. You're not, you're thinking of the mall, and you're thinking of the factory outlet center, and you're thinking, oh, well, people don't have money and blah, blah, blah. It doesn't matter if they have money. Okay, that's like shorting an airport because there's no passengers on the plane. The airport doesn't give a crap. I mean, yeah, obviously they make some more money on their concessions and whatever, but the airport doesn't care. They're renting gates. If the airlines stop flying and start moving out of the gates, then they're in trouble. But the airlines are subsidized and bailed out and so on and so forth, and they keep renting the gates, even if they're not using them. And also, by the way, if you stop renting a gate, somebody else takes it, you don't have the gate. So they hate giving up their gates. But anyway, that's just that particular thing. But again, you're servicing very wealthy people. You're not servicing the traveler. The airport's not there for the traveler. The airport's there for the airline. The airlines are their customers. The travelers are incidental, which is also true of sports, right? Baseball team, same thing. The people, the 50,000 people who go to a game are incidental compared to the TV money. It's all about the TV money and the advertising and the sponsorships and the so on and so forth. The stupid money you make from the fans is not a big deal. More so in the NFL, in fact, they're only playing 14 games or 16 games. See how old I am? I say 14 games. So, you're only playing 16 games in the stadium. Not even you're playing 8 games in the stadium all year long. You think that's what's driving their revenue model? Not at all. That's nothing. It's meaningless. It's all about TV and advertising and merchandising. So you have to think about what really drives the business, not what it's not always what you think about when you look at the business. And that's where the mistake is. And that's why I was so gung-ho on these two guys, because I was just like, people, it's like, you don't understand. It doesn't matter. It doesn't matter if nobody's going to the mall. It doesn't matter if this store or that store goes bankrupt. That's not important. Another person will come in. Somebody else says, oh my God, look what's available, this great place in the middle of the Tanger Factory Outlets, and I can get this for this much money and blah, blah, blah. And they're all happy. And they got their dollar and a dream. They go in there and they start building a store and try to make it work. So unless there's major, major fundamental shifts in the economy, these things still work. All right, so SunPower. Oh. All right, I just can't bring myself to sell SunPower. I love them so much. So they're $37.50 out of 56. You're still making $19,000, which is like 50%. We got an excuse to hold on. AT&T, also a new play, and it's only net $35,000 out of $80,000. So that's got a long way. It's got more than 100% to gain. That's a good one. Textron, though, is it's too risky and too expensive, so we don't want to do that one anymore. And Walgreens, how much more could I bang the table in this one, right? Just too cheap. Okay, they went up on the virus news. Now people aren't sure where the virus is going to be, blah, 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 but it doesn't matter. It's still a value stock. So we'll see. Now, I'm glad they're back down, because Thanksgiving next week, I'm going to pick the stock of the year. So I'm glad they backed down. If they do come back down, they're going to be a very strong contender for stock of the year, especially if I still believe that the virus is going to be, if people are going to go to, the drugstores get vaccinated. That's iffy right now. The problem was with the super low temperature one, people were concerned, and then, people thought the low temperature one was going to have them. Now it's so easy to get doses that it's going to be more widely distributed. So the Moderna vaccine is apparently on basically regular refrigeration, which means that it'll be at your doctor and so on and so forth. So people are going to want to go to their regular doctors and people are going to want to go to regular clinics and so on and so forth and get the vaccine. It doesn't require special equipment, so they'll do that. And that's it. And then today we talked about how do we protect the whole thing, right? So we cut out, I don't know how many exactly, but let's see. One, I'm looking for kills. 2, 3, Intel we're still with. 4, nope, kept Gilead. 5, 6, 7, 8, 9, 10, 11. Anyway, so all right, 11. Oh, I don't see the number here. I'm pretty sure that it's we killed all the puts except for 1. And then we killed 8 out of maybe 25, 26 here. So about 1/3. So basically about 1/3 of the major positions and almost all the short put positions have been killed. And that's what left us with the short-term portfolio. And that review today, there's nothing really to review there. It's nothing exciting. We didn't change anything. So basically, we're just, you know, we now have a very adequate protection in the short-term portfolio, though, because we still have about $500,000 of downside protection. And we will see how that goes. All right, but I feel comfortable that we're very well balanced. We've got plenty of protection. We're only down, well, we were only down 4%. I'm sure we're down a bit more than that now. But we were down 4%. And that's completely unimportant because we, you know, the whole portfolio is there to protect the long-term portfolio. So let's see if there's any questions. After the webinar for Thinkorswim, you can use flexible grid under charts and save it. You can then load it later. All right, I'll take a look at that. Thanks. Robin says, I have GM 2230, 2022 3037 bull call spread. When I went to sell my 30 call increased by 177, my 37 decreased. What does this mean? Well, I mean, look, the 37 call is much cheaper than the 30 call. So, you know, it doesn't take much of a move, depending on, I don't know what the numbers were, but if the, well, let's see, she's throwing at 2022 3037. So go GM 2022. Now GM's at 43, and she's got the 30, which is 1550. 37 is 950 bull call spread. So I'm sorry. So it's 3037. So 1550, 950. Let's make it easy. It's $6 on a $7 spread. None of that. It doesn't matter what they're plus or minus. You're going to net $6, right? What did you start with? What was your net going in? If your net going in was 4 and now you're netting 6, you're up 50%. Doesn't matter what the number is of each individual call. But the point is, you're saying that your $30 call increased 177%. So the $30 call is now, is that right? Yeah, 1550. So let's say the $30 call was almost 3 times. So let's say it was 6 when you bought it. So it went up 177%. It went up to 15. So it went from 6 to 15 is $9, right? That'd be 150%. Now, your 37 call went up 300%. Or you lost 300%, but when it tripled. So it's now, $950. So let's say it was $3, and now it's $950. So you lost 300% on that one. But what did you lose? You went from 3 to 950 is 650, right? And your other one went from 650 to 19 to whatever, to 1550. So it gained 9. So this one lost 6 and this one gained 9. Therefore, your net gain is 3. The percentages don't matter. What matters is you made $3. Don't care what the percentage is. This was a smaller number to start out with. That's why you have a higher percentage loss. But the actual loss is $6 compared to the actual gain of $9. That's what matters. All right, so hopefully that made sense for you. Bernie says, what was the position on M in the portfolio? Well, it's the one that I have in yesterday's post. CHL also at risk of delisting, SEC looking hard at this. I don't think so. I mean, if they do, they do. But I thought that was very overblown. That's just Trump making noise. Biden's going to come in. That's not going to happen. You know, unless they suddenly push really hard for it, which would be a mess in the market. CHL started falling after Trump, preventing U.S. investors from investing. Right. It didn't affect China. It doesn't affect CHL. That's not what it's about. You got to read these things. You can't just post them up, guys. All right. It's about new Chinese listings and some other stuff. It does not affect people who are already on the market. I mean, imagine what that would do to U.S. investors who already have these stocks in their portfolios. Yeah, I mean, you just can't do that. It doesn't just can't, you know, you can't do that to people. There'd be, you know, people would be freaking out. WBA, any thoughts on the Amazon pharmacy? Oh, yeah, that's right. The Amazon pharmacy it was hurting them too. Look, Amazon's a scary competitor to everybody, and if you took that attitude, you wouldn't invest in clothing stores or any kind, nothing. You wouldn't invest in any retail, right? All retail bad because Amazon exists. That's not the reality. The reality is they'll take 10% of the market. Are they going to take 10% of the market from Walgreens? Probably not. They're going to take 10% of the market. They're going to kill all the small competition. That's what they're going to do. Anybody who lives remotely in rural America and doesn't go to Walgreens and CVS, they go to Joe's Pharmacy and pay top money to Joe the pharmacist, because they don't understand that they're also paying for his education and medical advice and so on and so forth, the people that these guys give out when they come to the store. You're paying for a knowledgeable guy who's a certified pharmacist to be working the place in your little podunk town, that you get to go in there and ask him, what do I do for this? Or what do you have for that? Or what do you think about this? You know, people hit these guys up for advice all the time. And what you're going to do is you're going to basically put those guys out of business. And then you're going to be screaming that, like, how come I can't get the, you know, and then you're going to call Amazon customer service and say, what do I feel like this? And this is a problem for my neck. And which one do you recommend? It doesn't work like that, right? So that's who's going to really get hurt, though, the back road pharmacists who people don't understand that they rely on them for a lot more than just dispensing medicine. And Amazon's going to stomp all over those guys. But Walgreens and CVS, it's kind of hard. You know, it's hard to displace them. I mean, obviously they'll hurt them, they'll take some market share, they might force them to lower their prices on some stuff, but push comes to shove, it's just too easy. You know, all the doctors do it. It's that you send you home. It's not the same thing. You know, it's one thing for repeat medicine, but to get it in the mail. But you know what happens if you don't get your medicine? You guys have had stuff come from Amazon that doesn't come. You have to get your medicine. People don't want to be sitting there, and Amazon doesn't give you pills if you run out of your prescription card. Amazon just won't send the prescription. Your pharmacist, and I've had this. I've had times when my prescription ran out. And I've had times when for the kids, when the thing didn't have, the card wasn't right or some bullshit. And those pharmacists, I mean, for sure, Walgreens, they give you 3, 5, whatever, you know, they'll give you a few days of whatever you need. I was in a foreign country and my wife needed something and they gave her pills. Amazon can't do that. Pharmacists do that. You know, there's a service component there that you're not going to beat with Amazon. And so, you know, they'll get their market share, they'll get something. I mean, people will buy it. You know, I'm sure they'll do great selling Viagra and shit like that, but I don't know how much, you know, people who seriously need something that's important to them, that their lives basically depend on getting medicine. I don't know how much they're going to want to trust, like waiting for Amazon to deliver something and then tracking their package to see if they're going to have their pills so they can live a few more days. See, I just don't see that as being a huge thing. It's like it's a nice idea, but when you put it into practice, it's probably not good. New York is going to close public schools starting Thursday. There is not an M position in their portfolio. What portfolio? There isn't a long-term portfolio. I mean, that's where this came from. See, now you're making me look at this. Oh, Bernie. I don't know what you're talking about. What about CBD sits? See, now I'm interested. Oh, this is bullshit. I will testify to this. It's such bullshit. It really, I would say not all. I think there's a big difference in types. You know, we own a CBD company, PSW Investments. We have a CBD company called Hemboka, which is good, by the way. But yeah, we talk to people all the time because Hemboka had a radio show for a while. And we talk to people all the time, and they would come in and they would tell us stories about how I tried this and I tried that, and I thought CBD didn't work, but then I tried yours. I'm not saying we're the only one, but there are good and bad CBD formulas and good and bad CBD producers, and these guys are one of the best ones. It's pure, it's undiluted, it doesn't have chemicals. Their extraction process maintains all of the cannabinoids that make up the work with the CBD, because the CBD by itself doesn't do it. There's something called an entourage effect of all the little cannabinoids that are attached to it. And if you just extract the CBD, you waste it. It's still there. Technically, CBD is still your product, but you've destroyed the essence of what it is. You know, it's like saying I like roses, and somebody cuts off the petal and makes it a little square section of like one of the rose petals and puts it on a piece of paper and go, here you go. That's not the same thing. That's what you're doing when you just extract CBD without caring about how you're doing it. So I talked to many people though, which, you know, I wasn't a believer, but I actually found it worked for me too. But people say all the time, oh, I tried this one, I tried that one, I tried that one, and then I tried yours, and obviously that's why they were on our show. So let's remember, there's a filter to that. The reason somebody's coming in giving a testimonial is, and they wrote to us because of that, so we would invite them to the show. And the reason they're coming and giving a testimonial is because we're the one that they found that worked. There are dozens that work. There are many good CBDs out there. The thing is, though, there's many bad ones. And so what they would do is try. And the ones that happen to hit us and then it worked, they stop, right? That's when you stop. So they stop. And then those people write us a testimonial and say, oh, I love your product. And then we would say to them, do you want to come on our show and talk about it? And they say, oh, I'd love to come on the show. And they come down to the show. But you understand that's what it is. It's not like it's the best one. And that's the impression you get, obviously, from those kind of stories. But it's not like they tried all the good ones. They tried lots of bad ones and then hit us. And then they said, oh, my God, this one works. But point being, that's why I don't like these studies, because these studies are kind of bullshitty because they don't differentiate at all. They don't do a proper study. They don't really look at it. It's like if they test soda and go, all colas are the same. It's like, you know, that's not true. Most colas suck. Coke's really good. They all seem the same. They all have basically the same ingredients, but Coke just does something right, you know, to get it a certain way. Some people don't like Coke. That's fine. But for most people, Coke is the one that works. In this case, that's the point here. You know, just because it says CBD doesn't mean it's the same as any other CBD. Anyway, that's enough of that. So back to here, and for whatever reason, Bernie was deciding that we don't have Macy's, and now I have to find Macy's just so I can point to it and say, there it is. Hey, there's no, that's the L's. Say, look, there's no Macy's. Oh, there is no Macy's. You know what? It probably got cut off. I'm pretty sure we have Macy's. Otherwise, I wouldn't have, honestly. I would not have written it. I'm sure what happened is that Macy's came out between between Lebu and it came out between this one and that one, and it just didn't get in the mix in the portfolio. Got snipped out. I'm sure it's actually in the portfolio.